All right, good morning, everybody. I decided to start the webinar early today because of all the news. We have ADP in a few minutes. Oops. And then we have weekly claims after that. ISM later today. So I thought I'd get going. But for now, let's grab our cup of coffees. And I'll meet you back in 5 minutes. We can discuss ADP. Over that 5 minutes, then the release comes out, and then we can check the vol. So I will see you in 5 minutes. Reload the coffee. Wait. 5 minutes, everybody. 5 minutes. Good morning. Hey, maybe that's the good transition if I can catch that. Yeah, that was a good transition. Sorry, I've been drinking butter. Good morning, comment allez-vous? How are you? Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because trading is risky, not appropriate for everyone. Hang on. Wow. The butter, I drink ghee. And the ghee gets stuck in the back of my throat. Slimy coffee. Anyways, overriding goal of planning our trades in advance. Trading's risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Okay, we have ADP in a few minutes. And so we want to take a look at that. That's why I started the the stream an hour early. Please check out Traders Way. They're a good broker. You need a broker. You might as well have a good one. They're good people, but also the business model is unique because they're an ECN, and you want an ECN. There are not many, but this one is mine. Check them out. Okay, and we are going to use TRADARS today for this news. ADP coming out. Okay, we were at 122. Now, a bigger number means the Fed can't cut 50 basis points. A lower number means the Fed can. Now, I don't think they will, but what I think is irrelevant, what the rest of the market is hoping for, is what is likely to happen. Gee whiz, sorry. So anyways, this is coming out in a few minutes. And, just the numbers are so skewed. Look at this flat line. What does this mean? Is anything happening? Yeah, something's happening. But one time the number was so bad that we're still skewed here. So in a few months, we'll drop that old number. We call that the base effect. And suddenly this chart will become meaningful. But what we want to look at is, we were printing 200 and then we were printing 150. Now we're below 122. The market is expecting 77. Really? I think they could be disappointed, but anything below 122 is probably acceptable, to allow the Fed to cut. Now, I don't think 50 basis points. But, dude, if it comes out 77, maybe. Maybe. I don't know. That's cray-cray. The next thing, the next thing that's coming out, I have to move over here, at 8:30, and we'll look at that, is our weekly claims. So I'll just bring that up for later. But TRADARS has this. You go to fundamentals and employment, and weekly claims are right here. And so we can get ready for that. I'm going to switch this out. Let's make it, let's take this out. A year, 360 days. And we get a better sense. So we'll have that teed up for later. I've already checked the news vol, and none of this is really that great for trading the news. Okay. So we are seconds away. And we want, below 100 would be great. I don't know, though. Oops, I clicked the wrong one. Okay, if you get a number, let me know. I can pull it up here on the calendar again. Let's do that in a new tab, just so we can check out the history of it as well. Sorry, I forgot about pulling that up. I was monkeying around with something else, and that's not going to be a good... So anyways, the number's coming out. And let's find that. ADP 99. That's pretty good. Okay, it's above what the market was hoping for, but it's still a good number. And look at our plan, guys. Do you even trade these plans? But anyways, down to plan A. Then we had a higher high. Now we then produced a higher low, and now might be making a higher high. But thank you, Peter. Down revision. That's interesting, huh? So yeah, below 100K. Yeah, we haven't had that in a long time. So that will allow for some risk on. Okay, that allows for some risk on. Now we got to get ready for claims. We want claims to be a little higher. Oops, I need to switch this because the template indicator is biased. We're bullish on this. There we go. All right, let's go back. And I would expect we start to see things on the risk gauge. We still have things to do. We still have news coming out. So again, at 8:30, we have weekly claims, and that's going to be a doozy. Did I keep the weekly claims? Yeah, okay. So let's now look at the next one. And you can see this is a standard role reversal, right? Right, standard role reversal. All right. So let's go back, bring up TRADARS. The next bit of news is if you look at the yearly average, claims are at 217, but we're printing them much higher than that over the last bit, right? So over the last, oops, come on now. Over the last 1 quarter. Okay, on average, we're at 227. And the last, we were in the mid 230s. So if we can get this to 240K, once again, that's going to be really good for those that are hoping or wanting or expecting the Fed to be, how would you say, more aggressive per se, right? So 240. Now you could also do like, what is the 6-week average, for example? That's the nice thing about having a database is we can change this, right? Do you want 6 weeks or 8 weeks or 4 weeks, the 4-week average? I'm going to do somewhere between 6-week average. So instead of quarters, we can do weeks. Over the last 6 weeks, we're looking at 235. Yeah, so if we can be above 235, so I've said 240. Maybe that's too aggressive. So to be above the 6-week average, we'd want to be 235 and up, which is a slowdown in the economy, which allows the Fed to cut more aggressively. And that makes dollar weakness. JP is saying, where do you get it faster in Forex Factory? Do people still use Forex Factory? Is that still a thing? I'd much rather have like the FX Street calendar, for example, is really nice. Yeah, apparently JP does. Yeah, I just haven't heard the name in so long. Yeah, I haven't used them long. They were quite rude to me, so I'm like, huh. But that was a long time ago. Wow. FX Street has a really nice calendar that comes out quite fast as well. Mm-hmm. Mm-hmm. How much is the pro service, Denise? Trucking Mogul prefers, yeah, FX Street. Yeah, for sure. Oh. I see that it looks like it's only economic numbers, right? There seems to be some headline news as well. Yeah. All right. Mm-mm-mm. So we're about 5 minutes now away from the next news. Hang on, I want to... Okay, let's see if it's moving the market in any particular way. Is it creating new setups? Let's just look at Forex. Yeah, lots of little moves. Yeah, the yens have been great, huh? Yeah. Oops, that's not the one I wanted. So let's see what we have here for claims. See, here's the 4-week average. I looked at a 6-week average. That's where I'm like 235. And you can see the trend in claims this way. It does seem to be going up over the last few years, and we want that to continue slowly. We're about 3 minutes away here. Don't forget, later today we have ISM services. That's another big indicator. Is that right, Andrew? Well, that's why you have me, Andrew. Yeah, the crystal ball. You wait. Like I can predict government work? Can I predict the results of government work? Dude. Yeah. Oh, which reminds me, I didn't announce it outside of the Quant Box crew, but I've been asked to speak at the Fed coming up in November. So I'm going to the Fed to do a presentation. Here we go. Numbers are coming out soon. Isn't that cool? I get to now go into the St. Louis Fed and present to them. How nice is that? To an audience of economics people with masters in PhDs, and I'm going to teach them, huh? Yeah. How about that, huh? Talking economics with a bunch of economics PhDs. Yeah, how hard could that be? Roll in, roll in, roll in. Numbers coming in. Initial claims. Come on now. If I refresh, does it refresh that page? No. Ah, see. So 227. It's not great, huh? 240. Yeah, 227 isn't great. It's okay. Okay, it's okay. No biggie. No biggie. So this comes down. If you're going to skippity scalp, you're probably going to try to kick it off here, right? Kick it over here, baby pop. Yeah. So it's underwhelming. Okay, it's underwhelming, but it's on trend. Yeah, so this calendar is a little slower. It's not terrible. But 227, you can see lackluster. It's not really what we wanted. We wanted 240 or in the high 230s. So 227. Now, as far as green arrow, red arrow, right, Andrew? Well, it shows the economy is not slowing down that much. ADP has slowed down. That's good. But 227, it's showing it's under that measure, which is actually a better measure, it's not slowing down that much. Yes, there was, Emil. Okay, so it's mixed so far. Next one is the big one at 10. Okay, there's the little 5-minute scalp. I don't know if you caught the role reversal or not. Okay. Emil, I'll show you. You go to TRADARS. Okay. You go to the coaching room. Here it is. All right. Guten Morgen. Happy Thursday. Welcome to formerly known as Quant Box Live, where we get our global macro on under our fundamental radars. Yay! So we have a fundamental radar. And our goal is to uncover the underlying and hidden intrinsic trend. If we do have a trend, we will be able to let our winners run. That's the secret sauce. The secret to success is knowing when to hold them and knowing when to fold them. All right, then, Emil, you need to send me an email. And first of all, to remind me that we're not able to get in. But the second thing is, describe to me what you believe or think your membership is. Like, what did you subscribe to? Was there a special deal? Do you have an annual? Do you have a monthly? Was there something else? Because at this point, I've transitioned 99% of everybody over. I understand that a few people maybe did not, so I have to go figure out why not. Where did you subscribe to? The other thing is, emails went out yesterday evening. You might have been asleep when I sent them out. Go check your email, check your spam folder and all that kind of stuff, because emails went out. So there's a high probability, just because if I say 99% of people transitioned over, there's a high probability that you received an email to say you need to create a password or something to that effect. So double, triple check that, because that's the most likely thing. You got an email and you haven't seen it. And it would have been, 12 hours ago. Okay. So double, triple check that. Okay. Cool, right? Cool. So what captures my eyes? I'm thinking that peso might be good, huh? What do you think about peso? If we're going to go back to risk on, like if you had to flip a coin, like where do you think we're going to be in the next day or two or three? Are we moving back to risk on? Well, seasonally, that would be a bit early, but, one thing to keep an eye on would be USD Mexican peso to the downside. Now, USD Mexican peso experienced 5 consecutive bullish candles, possible bearish price movement to follow. So we might hit some profit taking at 20. See, we're at the psych level. Okay. So once again, email me and tell me what you think your membership is so I can go find it and find out why you haven't transitioned, huh? Greg says, now, isn't it the best at the beginning of the month? Yes. Yes. But on a risk-off month, the dollar is going to overwhelm that, right? Okay. No, Eskimo, no. If everyone with a Quant box package has access to TRADARS Quant box, everything. So we're okay. Like let's do it this way. Okay, this is Quant box. So if you subscribe to Quant box, you've been transitioned over. And now you have access to QuantBox here and all the coaching here and all the videos here. It's all over here. And so the live stuff is done over here now. But I've just moved your membership over. Now, Andrew says peso political risk. Yeah, well, always, right? Yeah. Right on, Eskimo. Yeah. Glance at the beast. Okay. Sky Killer, if you were a part of that live training, it's still in your investor boot camp dashboard. Yeah. So it's still there. You just log into investor boot camp and it's still there. No. Yeah. All right. So looking at like, right? Who asked for it? Somebody. Greg. Greg wants to look. So one way to do that, Gregor, okay, is you only want to look at Beast, which is cool. All right. So one way to do that is do it that way. Okay. And have the machine, have the Terminator look at this. And it sees 3 different types of patterns on 2 different time frames. And more likely down than up. Okay. Okay. So one of the things it's looking out is like, oops, I want to do it this way. It's not. Hang on. Stupid drawing tool, or me. Stupid me. All right. All right. So the first thing is it notices that, okay, there seems to be a downtrend, a consolidation. And if there is a break, it's an if. If there is a break, it'll create a lower low. And then you probably want to do lower high, lower low after that. Okay. Ken says, any cipher patterns? Look, of all the patterns in the world that can be, okay, TRADARS looks at the 12. It's actually closer to 14 or 15, but let's say 12, because the other ones rarely come out. But imagine you only had the 12 most reliable, quantitatively proven patterns. There's a lot of patterns out there that people are taught, but when you actually add them up and look at how often they work, they're not good. So I don't know anything about cipher patterns, but these patterns are quantitatively proven. Okay? Cool. So there's only 12 to 14 of them, right? But I can prove to you they work. So that's that. So cipher patterns, I don't know what that is. I can't prove to you they actually work. So I don't know. No. Okay. All right, let's go back to this. So this is like a breakout type thing. It doesn't know if it's going to break out. It's not a signal. It's telling you there's a pattern going on where we had a downtrend, consolidation, and we've tested resistance again. So maybe this time, if we break support, okay, you could scalp your way down. But really, the better trade is the role reversal. Huh? Support becomes resistance. Cool. Now, same. Okay, same. This is really, it's a different pattern, but it's the same outcome. It's just what it's doing now. And again, this is why you have multiple patterns. It's connecting this bottom with that bottom and that bottom. Okay? So you end up getting the same thing. But it's just trying to show you that 2 different traders may look at it differently. Now, I like the one on the left, really. I'm a trap and break guy. Okay? A cipher is touted as the holy grail of Gartley butterfly. Oh, what? Yeah, well, it does Gartley's. Whether it's a cipher or not, don't know. Okay? But Ken, in my experience, I've never been a fan of patterns like that. I think they're overly complicated. There's a simpler way to do the same thing. So, specifically a cipher in there. I don't know. We can take a look at some of the Gartleys. To me, they don't come out that often. And again, this is just maybe me mentally through my own experience, but I find those types of patterns just way overcomplicated, just ridiculously overcomplicated, where you could just like sell the lower high. Okay, so, but maybe that's a limitation for me, right? Right, Ken? But TRADARS does look for Gartleys. So we can take a look and find one, Ken, and we can review it. Do you want to do that, Ken? Do you want me to find a Gartley pattern on TRADARS and we can analyze it and you can tell me what kind of Gartley it is? Okay, cool. Let me finish this, okay, Ken? All right. So these are same, only different, which I find helpful. I'm a trap and break. Someone else is going to trade it a little more trendy. Okay, that's fine. Okay, now looking at the higher time frame, 16 minutes ago, okay, it's just looking at it from a higher time frame, but it might give you a lower target. So granted, this is Beast, and it sees this. It essentially sees the same thing on 3 different time frames. Okay, this one first target 88.08, 87.87, 87.87. It gives an entry level, a stop level, all that kind of stuff. So it's kind of the same thing over and over and over again, but they're different patterns. I want you to see and take note that it's like talking to 3 other traders. Hey fellas, what are you up to? Oh, we're selling pound yen. Oh, cool, me too. What do you see? Okay. Breakout, down channel, flag. Notice how it's already updated itself now 17 minutes ago, but I didn't refresh the page. Dude, I have this new tool that I've already built. Oh, snap. Have you ever had a toy and you play with the toy and you're like, dude, this is even better? This new toy? I'm usually not that type of person. Yeah. I usually buy something expensive and within 3 days I regret it. Other people are like, oh my God, you must be so happy. I'm like, oh my God, I regret it. I regret it. Anyways, no, things often don't make me happy, right? It's so funny. Often, right? I built this tool. Or I should say, I had a tool built for you that I'm going to release probably next week. Because I'm building a news trading team, a scalping team. I don't know what to call it, the scalp trading team or the news trading team. But for those that are trading 5-minute charts throughout the day, I can't tell you the other thing I'm building yet. But let's just say continuing news flow is important, as well as actual event-driven strategies. There's 2 things, trading flow and trading events, right? But anyways, let me go back to what I was talking about. I've already had a tool built for you, and it's so cool. And the thing is, it's pretty. Like, this is pretty. I look at these charts and I'm so happy. Greg is like, hey, can you look at pound yen? Boom, let's look at pound yen. Oh, my God, right? Oh, my God. Here's 3 charts, just pound yen. And notice it doesn't see anything on the 4-hour. It doesn't see anything on the daily. It doesn't see anything on the 1-hour. I think that's informative too, what it doesn't see. But anyways, it found these 3 things. And I love charts. And to me, it's like three opinions from three different traders. I want to sell it. Greg wants to sell it. These three guys want to sell it. But we might all see something different, right, Greg? And I'm like, so I don't look at this as redundant. I look at this as three other trading buddies. And I'm like, so what are you doing? What are you doing? Oh, I'm doing a flag. What are you doing? I'm doing a channel. What are you doing? I'm doing a breakout. I'm like, cool. I'm kicking it off the moving averages on the daily. I set short trades up a week and a half ago. Okay. So anyways, this new tool that I built that I'm going to release probably next week once I get the scalping team up, because it's really built for them. It's a page even more beautiful than this. And I'm telling you, maybe I'm the dog eating my own dog food, but I love this page. And it keeps updating, and I haven't even refreshed the page. This new tool updates itself constantly throughout the day, and it's pretty it's so pretty. I get emotionally excited. I'm like, oh my God, it's so beautiful. But throughout the day, it's constantly updating itself. Let me just preface it this way. Can I ask you a question? How about this? Because I can ask you a question. I don't want to tell you what it is yet. But of all the assets, of stocks, stock indices, commodities, and all the Forex stuff, and crypto, everything that TRADARS watches, would you like to know the best thing to be trading right this second? Like right now. What's the number one thing to be trading right now? How about the number two thing? Would you like that? Well, what about the number 3 and the 4 and the 5 and the 6 and the 7 and the 8 and the 9 and the 10 and 11 or 12? And it's just updating itself in real time. But it's not just tracking what's happening right now. It's tracking the history. And I mean detailed history. I don't mean like, the 15-day average. I mean to a degree that's astonishing. And it's like, hey, Jim, go look at these 3 things. Like, this is the stuff. And we're telling you, it is predictive now. Now we're talking about predictive. Nobody knows the future. Even the machines don't know the future. But if you knew the past to a crazy level, a crazy degree, if you just had millions of candlestick data for every asset, you should be able to have some predictive capability based on past performance. Now, it doesn't predict future results, but probabilities. So what if it said, Jim, go look at Aussie Kiwi right now over the next 2 hours. And it could quantitatively prove to you why you should be looking at it. How many people would be interested in a tool like that? And 2 hours later, or 1 hour later, or 30 minutes later, it reorganizes everything and like, dude, you should go now look at this other thing. Well, no. Because I looked at that too. I looked at maybe developing a sentiment tool. Because I'm always like 6 months ahead, right? I looked at that. I could do a sentiment tool. The problem is I don't like sentiment. But you might like sentiment. So we're doing some research on that. So maybe, but I'm not prioritizing it because I don't like sentiment. And just because, pound yen has come up X number of times on X, on Twitter, that kind of stuff. Can you track that? Yeah. You can teach some machines to go do that. And who's writing it? Maybe. So, like, I could do that, Ken, but it's not on my... well, it's on the to-do list, but it's a lower priority. But it can be done. It can be done. Okay, but no. That's not what I'm talking about. I'm talking about if you had millions of candlestick data for 15-minute charts, hourly charts, 4-hour charts, and daily charts. You have millions of candles. Could you use statistical analysis and probability analytics to try to narrow down your target? Yeah, well, we already did that. It's already built. I just haven't shown you yet because I'm focused on transition. You are going to be like blown away. And it's pretty. It's pretty as a picture. So anyways, I can't wait to show you. I looked at it again yesterday because we're working on the site. And it's just like, oh my God, it's so nice because I was sitting there in a meeting and watching it change and update. Just like this, 26 minutes ago, right? Remember it was 13 minutes ago? 13 minutes ago? Now it's 26, and you're like, wow, cool tech, man. Cool tech. So anyways, let's put it all back on. Let's go find ourselves a Gartley. Okay, Ken, you still here? Let's find ourselves a Gartley. Now, okay, they exist. They're I can't tell. Butterfly emerging. Butterfly Fibonacci pattern identified at 7 a.m. 2 hours ago. This pattern is still in the process of forming. Possible bullish price movement toward the target levels ranging from 106.08 to 106.76 within the next 1 hour. Okay, that's a basic one, isn't it? And you're like, hey, can you zoom in? Yeah, I can zoom in. That's pretty basic, and it's pretty short term. I can get you most likely, because I don't know if they exist. I can only show you if they exist, right? But that is a Gartley. I think that's a pretty short term time frame, hourly. Okay. I see, like, I wouldn't do that if I was me. The way I look at that is I would still pass on that pattern. But what it's showing is if it bottoms here, then it creates a butterfly. All right, let's go to higher time frames. Okay, big move. ABCD, that's close, but not quite. Here's one, Gartley emerging on the hourly chart, Aussie Swiss franc. Gartley Fibonacci pattern identified at 5 a.m. 4 hours ago. This pattern is still in the process of forming. Possible bearish price movement toward target levels ranging from 57.05 to 56.60 in the next 5 hours. So again, it's not a Gartley pattern has formed. It's a Gartley pattern is potentially forming. So, okay, so we have the down, the up, the down. So it could form an up to this point. So now it's doing A to B, B to C. So we're here at C. C can go up to here, which is presumably D. And then you have your little dipsy-do. What you do with that, I don't know, because I'm not a Gartley guy, never have been. So I don't know what happens next, and I understand it's probably even 50-50, I'd guess. I don't know. Is this bullish or bearish? Because on this time frame, I'd want to take it up, but a bear might take it down. I see. That's it. So I don't know, because that's a lower high for some. And it depends on what was happening up here, in my opinion, because if that happened, I would treat this almost like consolidation and take it down that way. But again, I'm not a Gartley guy. I don't know. And so you might look at that and say, oh, well, dude, it's obviously the pink. I'm like, oh, okay. But see, I'd be doing that for different reasons, not because of a Gartley. Short at D? Yeah, but is it going to make a lower low, Ken? Ken, is this eventually the plan here? Something like that? Is that how you would do it as a Gartley guy? Like this? Yes. Okay. Yeah. Okay. Cool. I get that. And I would then venture to guess that happens in a down move. Yeah. So I may not trade it that way, but if I did, it wouldn't be because of a Gartley pattern. But it's not that the Gartley pattern's wrong. It's that I would probably do the same thing for slightly different reason. And that's why it's nice to have the different patterns, right, Ken? So like when we're talking about the beast, the pound yen, there's 3 different things on 2 different time frames, but we would all do the same thing. I probably trap and break, so I do the first pattern. Someone else sees it as a down trend, so they're just trying, and the other one was a flag. But we're all doing the same thing. Let's see if we can find another one. Okay. By the way, when I look at charts like this, like what we're doing now, I get giddy. I love looking at charts. This is so pretty. And to have like this analysis to think if I agree. So here's another one. Euro Swiss franc. Different pair. Came out 21 hours ago. Should last 2 days. The target is 94.30. Okay. And it's on a 4-hour chart. Interesting. So down, up, higher, low, higher, high, and then higher, low. So what's happening here is the reason you get different setups like this. Like why do these patterns form? On a daily chart, this is a 4-hour chart. There's a moving average right here, or it'll be there in the future. And then, okay, so then on what they are doing here is a trade like this. Now on smaller time frames, okay, the hourly, the 15-minute chart, all that kind of stuff, you know, essentially retail traders, okay, we treat it like this. We're going to trade it like a double bottom, and then it's going to come up, and then we'll fall, and then it'll come up, and then it'll come down, and then it'll come up, right? And we're trading it, but on much smaller time frames. Where amateurs tend to go wrong is they don't realize they're here on the high time frame. So, right, what happens is this is a zone in which they lose money. Because they're still buying, they don't realize that's just a bearish sell zone on the high time frame. So they make money on the way up, they lose money on the way down, and then we get this logical breakout, and then hopefully now everybody's selling, and that's where you get your expansion wave. If you're a Elliott wave person, you get your 3 wave on this, because now retail and institutional, or short-term and long-term, dumb money and smart money, everybody's selling. Different time frames, different reasons, different rationale, but we all agree. Plus, if you were a bull, where would you put your stop? So imagine, let me do this in purple. Okay, imagine you were doing this. This was your plan. Where's your stop? Below A. So where do you get your expansion? Okay, short-term bears have sold on the roll reversal. Long-term bears sold on the daily chart. And the short-term bulls are all being stopped out because they traded the double bottom and they were waiting for a higher low. They didn't get it, but they're long here. Their stops here. They get stopped out. Now, bulls are selling. So we'll call this a line E. At line E, bulls are selling. Short-term bears are selling. And long-term bears are already short. Is that helpful of understanding why these patterns form? I don't like patterns in of themselves. I have to understand what's actually happening. What's the humanity behind the pattern? Here's another one, Euro Swiss franc on a daily chart. Cool. What do you think, Ken? Luis, right? Luis says, hey, man, sell S&P 500 on the high. Yeah, I don't disagree. Right, but what do you think of the Gartley patterns? It does a pretty job, right? Like, we don't know, it hasn't formed yet, but it could form a Gartley. Right? It could form. Now, you can see this came out 3 days ago. Well, the next two candles actually have been selling off of the moving average. So this Gartley pattern is failing. Okay? Okay? So it's not that it's happened. If it's happened, it's up here. It's that it's like, hey, Ken, check this out. Check it out on the daily. Wait, 4 hour, right? 6 on 240. No, daily. Check it out on the daily. And it might be forming, but that formation now, the pattern is failing. Well, this is just a heads up. It's like, imagine it's doing the grunt work for you. Okay, you go to your charts, you see this might be happening, and you're thinking about, well, maybe a Gartley is forming. Well, it's already done all that. Now, we don't know, you don't know, and it doesn't know what the future is going to be. But if you're looking for a Gartley pattern, well, it's found one that's potentially forming. And if it fails, it fails. And you can see over the last 2 days, the more important thing is it looks like it's just selling a pullback to the moving average. Oh. And that would be a pattern, a failed Gartley pattern, because it's not failed to produce profit, it's failed to develop. So it's thinking ahead. It's failing at the EMA. Yeah, right. And therefore, this pattern would not come to fruition. You see? But it's still showing you in the past, like, it could form. So if you should keep an eye on it. Okay? Okay? Now, these patterns have already formed. So these are confirmed patterns. So, right? Okay, that's what this is about. That's why we can have probabilities attached to it. Okay? Litecoin. Okay? 3 o'clock this morning, 3 a.m. Litecoin did break out. 77% chance. We're going to basically 71 to 75. See? So what happened was it went from the developing patterns to an actual pattern in play. That's the difference. These are forming, and you should keep your eyes on them. And to me, that's better anyways. Okay? To me, it's better anyways to have these ones because they're thinking forward. Things may be happening. Oh, good. I can now go to the chart, and now I can make my decisions. You see? The other stuff is, if you only looked at the scalping one, well, it's kind of after the fact. And I don't know. It's not that you're too late. It's more like you could have been in a lot earlier while it was forming. Okay? You coulda, you shoulda, but these are in play now. Like it has actually happened. So if you had a Gartley pattern, the Gartley pattern happened, and so now what? Now you should be in that process of trading a Gartley pattern. But you could have been in it earlier while it was forming. And so like I like this better so that I can go to the chart and say, yeah, pound yen like we looked at earlier. I would have liked it up here. Okay? So even though it's only been an hour, we're already late. So this was better, okay, 42 minutes ago. It's already dropped 3/4 of the way. This has already worked. Okay? That kind of stuff. So, right? So you go through the patterns that are potentially forming. And I don't like all the patterns either. So here's what I would do, if I were me. I'm like, I don't really care about those. And I don't trade Gartleys and stuff, so I can kill those. I don't have to, but I could. I'm a channel guy more than I'm a triangle guy. I don't really like triangles because they lack trend. But if I look at a busted triangle, I can go to Euro Kiwi, or maybe I already know. And I say, well, I'm a bear anyways. See, like if I was going to short Euro Kiwi, it would be because I see the market like this. Down, consolidate, no lower lows, no higher highs, no lower lows, no higher highs, breakout, pullback, gone. And I'm going to trade it, right? Like in here. But I could trade it a little higher, like up in here. So if I already knew my direction, I could consider Euro Kiwi. I could consider Pound Kiwi if I already know I'm looking to sell it. Now, wedges and channels I love too, because they're more directional versus consolidation breakout. So I'd trap and break this. I don't have to trade it like a triangle. I would do a trap and break. And I teach this, right? So I sell up here and I sell down here off after the break, right? So like, for example, I can sell here. That's plan A. Then if it breaks out down, then plan B is sell the retest. Okay? It's different than the triangle, but it's still a heads up. Good morning, Maida. Okay? It's still a heads up. But on top of all of that, pound Kiwi, euro Kiwi, right? Well, we have other tools to help you make a decision. Should you be buying that or selling that? And okay? Yeah. So you're like, Forex, should euro Kiwi, do we want to own that or do we want to sell it? Well, let's take a look. Oh, we're actually neutral. Technically, there's something going on here, but fundamentally, it's mediocre. What was the other one? Pound Kiwi? Okay. Or was it Aussie Kiwi? I can tell you right now, and by the way, here's a little hack. You type in Kiwi, and it tells you Kiwi dollar is a 6, Kiwi CAD is a 4. These are things to be buying. Things to be selling are Aussie Kiwi -4. Pound Kiwi, euro Kiwi are zeros. You can get all the information just from the drop down. Hey, you're welcome. So I don't know. I don't really want to sell euro Kiwi. I don't really want to sell pound Kiwi. But Aussie Kiwi is favorable. Okay. Seasonally, though, it's up. But notice very soon in the next 4 weeks, probably 3 weeks, but let's say in the window of the next 4 weeks, Aussie versus Kiwi tends to fall. And so seasonality, we're here. It's a 1, but it's most likely to go to -2 fast. Okay. Now, Andrew, so the correlation alert, it's only looking at it technically, not fundamentally. And it's seeing multiple patterns that say the same thing. Kind of like what we saw in pound yen. Okay? But it doesn't mean it fundamentally makes sense. It just tells you technically it is actually happening. There's a difference. I'm looking at, right, what should be. By the way, I just noticed Quant box bias. The developers never did that before. All right, well, we'll leave it there for now. Okay, what I'm looking at now is sort of rational and logical. We're comparing Australia to New Zealand, looking at GDP, CPI, employment, okay? Interest rates, but not central bank interest rates. We're looking at their treasury yields. We're looking at institutional positioning for both. We're looking at retail positioning. And we're looking at a whole bunch of other stuff. Okay? And in this case, I'm also looking at what happens throughout the year. And we're flat here and the future is down. Okay. So this is kind of like what should be, what you would expect to be, right? And even a score of -4, which is is mediocrely down. So even then it's not down. But it doesn't mean it's not falling or isn't going to fall. So if pound Kiwi just threw out, so if you just got something from TRADARS that says check out pound Kiwi, wait, was that, what was it? Pound Kiwi. It's because it sees something actually happening right? Doesn't mean it logically is trending that way, but there is a trade. Now, if you look at the future for pound Kiwi, okay, seasonality, once again, we're caught up here. It's not a bearish month, but it's going to be. Okay, so we're up here, ladies and germs. We're up here, and over the past 10 years, this asset has fallen. It peaks out in the month of September. So now you can pull up your own chart, or you can do linear projections and say, oh, somewhere in the month, okay, somewhere in the month, this thing rolls over. Are you going to go for 30 pips if that happens? 300 pips? Or 1,000 pips? I would suggest 1,000. Because we know historically, we don't know what's going to happen this year. Yes, the Fed. Okay, yes, the Bank of England. Yes, the RBNZ. Yes, the elections. Yes. But what normally happens is it falls from, let's say, half of September, okay, all of October, all of November, and half of December, let's say. Okay, now, if it did something like this, which on average it does, would you go for 30, 300, or 1,000? I would try for that. And so we know what's likely to happen is at some point this turns bearish in September, then it falls, and then there's an up in October, then it falls, then there's an up in November, then it falls, and then you're out. So you can have trade 1, trade 2, trade 3, and each one is worth 300. So this is 300 plus 300 plus 300. Okay. This one is 300 plus 300. And then this one is 300. Okay, 3, 6, 9, 12, 15, 18. Potential on this one pair, if you stack them and pack them, is 1,800 pips. Because you know when to hold them, okay? And the decision-making process you go through is logical and intelligent. With data that shows you 10-year averages, sometimes 20-year averages for every asset class you trade. Holy. And not only do we have 2 seasonality tools, I have already built a new seasonality tool that is going to blow you away. It's already built. I'm going to give it to you probably next week. But notice, week 39 is usually the buy week. What? week of the year. Week 36. Week 39. Oh my God. Is that the third week of September? Shut the back door. I've been buying in that period, week 39, forever. But now I can prove it to you. Oh my God. You see how? Dude, I am going to radically change the way you trade. You are now going to trade like an institutional trader. And I'm going to be on your trading team. You're going to make trading and investment decisions like an institutional trader, and you're going to add me as your Harvard-trained economist because you're going to attend the fundamental meetings every morning. And now you have the equivalent of a staff of technical analysts watching 7,500 charts in real time. And like I showed you today, 3 different plans on pound yen alone so that you can get 3 different opinions. Is it important that all 3 say the same thing for 3 different reasons? I think so. So I'm your coach, but I'm your economist. You can think of me as a coach, but I'd rather you think of me as the economist that works on your trading team with you. And you meet with your macroeconomist every morning. Maybe JP. Okay. But anyways, thank you for being part of this community. Everything is about to change, and it's going to change for the better. You're going to make better decisions because you have better information, and you have better resources. You're going to take control of what you do because every trade will be logical, both fundamentally and technically. You're going to start developing consistency in what you do because we're removing the randomness that an amateur trades with. And then lastly, you're going to be confident. Confident enough to, like that, those trades that I just set up, you're like, potential 1, 2, and 3, you're like, 1,800 pips. If you've never done that before, it's because you've never tried. And you probably haven't tried because you don't have the confidence. You don't have the confidence because you don't have the consistency. And you don't have the consistency because you don't have the control. Because why don't you have control? Because you're a mess technically and fundamentally. And that is now fixed. Problem solved. You're going to turn your trading into a small business. And you're going to have a powerful team in your small business. And it's happening. If you're in my swing trading group, there is a small chance, let's say a medium chance, I moved the swing trading group to TRADARS today. I don't know if I really want to do that yet. That might be too much of a leap. I think I might not do. I might decide not to. Because the other challenge is next week I'm going to miss a couple of days. And I don't want people to be confused. You're like, I can't get into the meeting because I thought it was over at Investor Bootcamp, but that's not working. So then I tried to get to TRADARS and that's not working. And people just didn't know I was out of town. So maybe I won't do that. But very, very, very soon, the live groups Okay, we will have the fundamental trading team and the technical trading team. What's the difference? The fundamental trading team, well, that's your Quant box people. The technical trading team, well, that's your day traders. We're going to have a new scalping team. That's a new team. What about swing traders? Swing traders have been moved over to TRADARS. And swing traders have access to community. So you can ask questions and collaborate with others, participate in our challenges, okay? And attend the swing trading meeting on Thursdays. It's scheduled, but I'm not going to do it here, okay? And then on Tuesdays, we have our week on the street. So that's the same as the swing trading group. Okay. And the courses are under the courses section. Okay. Cool. So swing traders will be over there. Day traders will be over there. Quant box traders will be over there. And then, of course, those that are original subscribers to TRADARS are over there. So everything is going to be there. Okay? But I think for the next week or two, we'll keep doing the swing trading group over at Investor Bootcamp. Maybe I'll move the day trading group first. Maybe I'll move the day trading. Maybe I'll do that. We'll see. We'll see what the developers can and cannot do. So I hope you're half as excited as me, because I'm so ridiculously excited that half as excited would be like a child going to the circus or going to Disneyland or something. I'm like a child going to Disneyland times 2. I am giddy. So thank you for your patience. This is all happening, and it's happening soon. Peace on earth. May the pips be with you. May our profits be above average. Please have a wonderful trading day. And swing traders, I'll see you at 4 o'clock at Investor Bootcamp. Cheers.